It's a day of chills for the home appliances and cooling sector as two major players, Whirlpool India and Voltas, sent investors into a frenzy. Whirlpool India dropped 20% after its parent company announced plans to sell a significant stake, shaking market confidence. Meanwhile, Voltas shares plunged 12%. What's behind this dramatic market moves and what does it mean for the investors? Let's dive into the details. First, let's start with Voltas. Voltas shares are down by a sharp 12% today after releasing their Q3 FY25 results. Let's break down what's happened and why the market has reacted this way. Voltas is a leading player in air conditioning and engineering solutions in India. It's been around since 1954 and is part of the Tata Group. Beyond air conditioners, they offer air purifiers, water coolers, commercial refrigeration, and other cooling solutions. Voltas' revenue is primarily generated from unitary cooling products, which contributes to approximately 57% of its total revenue. Electromechanical projects and services constitute a significant portion, contributing 39% to the total revenue, indicating the company's involvement in large-scale infrastructure and industrial projects. The remaining 4% of the revenue is generated from the engineering projects and services segment. Overall, Voltas' business is heavily reliant on cooling products, but it also maintains a significant presence in the infrastructure services sector. Now, coming to their financial performance, revenue saw a healthy 18% jump year-on-year, coming in at 3,105 crore rupees compared to rupees 2,626 crore rupees in Q3 FY24. But here's the real headline. Net profits stood at rupees 132 crore rupees, marking a strong comeback from rupees 30 crore loss in the same period last year. While that sounds good, right, the company's earnings missed expectations, and this led to today's steep stock price decline. Now let's look at the segment performance. First is unitary cooling products. This segment continued its strong growth momentum. Volume growth for the first 9 months stood at 42%, and Voltas still holds the top spot with 20.5% market share. Revenue for the quarter grew by 20% to 1,771 crore rupees, but the segment profit was rupees 104 crore, down from rupees 123 crore last year. Next is electromechanical projects and services. This includes domestic and international projects. Revenue here grew 21% for the quarter, and the segment turned around with 57 crore profit compared to a 120 crore rupees loss last year. Next is engineering products and services. This segment faced headwinds, with revenue dropping to rupees 130 crore from rupees 155 crore last year. This segment profit also fell by rupees 37 crore from rupees 50 crore. On the leadership front, Voltas announced that its current MD and CEO Pradeep Bakshi won't be reappointed as his term ends in August 2025. Mukundan Menon has been named as the new managing director and Sonia Singh as an independent director. With summer approaching, demand for air conditioners, commercial refrigerators, and home appliances is expected to remain strong. So while Voltas' results show a strong recovery, missing expectations, leadership changes have dampened investor sentiment for now. Let's see if the upcoming summer season and their capacity expansion plans help turn the tide. Shares of Whirlpool of India took a nosedive today, falling by a whopping 20%. So what triggered this sharp fall? Well, it's all about the announcement from their parent company, Whirlpool Corporation, and it's got the market pretty rattled. So what happened? Whirlpool Corporation, the global giant that currently holds a 51% stake in Whirlpool India, announced that it plans to reduce its stake to about 20% by mid to late 2025 through market sales. Now, this doesn't mean they're completely walking away from India. They have made it clear that Whirlpool India will continue to be an important part of their portfolio, with brand licensing and technology agreements staying in the place. But the idea of the parent reducing control has spooked investors, and that's why the stock has taken such a beating today. Whirlpool Corporation's statement highlighted a few reasons for this move. They want to give Whirlpool India more autonomy to adapt to the rapidly evolving industry landscape. The Indian unit is already well funded, so this shift is aimed at accelerating growth by allowing the local management more freedom. They expect the sell-off to deliver value to shareholders in the long run. From a financial perspective, Whirlpool Corporation is looking to strengthen its global balance sheet. They anticipate net cash proceeds of around $550 to $600 million from this transaction, which will help them meet capital allocation priorities and reduce debt further. Now let's look at the market reaction. The sharp stock price drop reflects investor concerns over the parent company stepping back. Last year, Whirlpool Corporation had already sold a 24% stake in the Indian unit for about $468 million. And this fresh announcement adds to the uncertainty. So what is our take? While the company has positioned this move as a positive step for the growth and operational flexibility, markets tend to dislike uncertainty, especially when it involves ownership changes. It's going to be crucial to see how Whirlpool India handles this newfound autonomy and whether it translates into strong growth down the line. Now, if you want us to do an in-depth analysis on any of these companies, do let us know in the comment section below. Having said that, this is Neha signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.